Hello, my name is Mike Hart. I'm a Senior Loan Officer with Mortgage World Bankers in Astoria. Today I'd like to talk about the secrets of credit. So let's start with what is a credit score? This is a three-digit number used by lenders to evaluate the risk associated with lending money. It is generated by a mathematical model created by Fair Isaac Corporation in the 1960s. Thus we use the term FICO. Scores range from 350 to 850. There are three major credit bureaus: Equifax, TransUnion and Experian, each with its own score. These three bureaus use their own scoring model, and those scores can vary from bureau to bureau. So what do Experian, TransUnion and Equifax do? Well, they can nearly tell you what you had for your breakfast this morning. They record every dollar you ever have borrowed and how you paid it back. They keep track of every time you have ever asked for credit. They track every employer you've had, and they track every move you've made, recording each new address. So what does the score mean? It's a formula that predicts the statistical chance of a consumer becoming 90 days late on a particular loan obligation over 24 months. The score is generated by analysing the information contained in the consumer's credit report at that point in time. So basically, the higher your credit score, the least likely you are to become delinquent, and the lower your credit score, the more probable that you will become delinquent. If you have a credit score above 720, it's viewed as being excellent. 680 is good, 620 is fair, and below 620 is poor. So now let's look at the breakdown of a credit score. Your payment history accounts for 35% of your total score. All of your payments should be made on time. A late payment today can have a more negative effect than a bankruptcy 5 years ago. This one late payment could determine whether you qualify for a mortgage or not. Past due accounts should be brought current immediately. Judgments and liens generally have to be paid off prior to any closing. A satisfaction of judgment should be obtained from the court and sent to the three bureaus. However, collection should not be paid before any closing, as this will drop your credit score. Payment will be taken at the time of closing. Paying a collection account a couple of years old and will be viewed as recent negative history. And as soon as you reach out to the collection company, you start the clock again and your score will drop significantly. The balance you owe versus the available credit lines accounts for another 30% of your credit score. This is all about managing your debt. Balances should be kept at 30% or below of your high credit. These balances should be maintained for 3 to 6 months prior to applying for a loan. Do not consolidate balances on one card just because the rate has 0%. You are better to have 3 cards with a lower balance than 1 card with a high balance. Opening new cards and having high balances dramatically lowers your score. If your balances are high, try calling your credit card company and ask them to raise your credit without running another credit report. Do not go over your credit limit, even by $1, as this is seen as being reckless and a violation of your user agreement. Your credit history makes up 15% of your score. The longer your accounts have been open, the higher your score will be. Don't close out credit cards, particularly if you intend applying for a mortgage or any other loan. If you must, close the newest ones instead of the older accounts. Scores will improve over time if you keep them open and use them every couple of months. Use them and pay them off when you receive a statement if you so wish. 10% of your credit score is inquiries. They affect the score for 12 months after they are made. There are 2 types of inquiries, hard and soft. Hard is when a potential creditor, for example a credit card company, department store, auto finance and mortgage company, run your credit. These impact your score. A soft is when you check your own credit, or if an employer or even an insurance company checks your credit. These do not impact your score. Multiple auto or mortgage inquiries are treated as only one if made within 45 days. So it is better to shop for a car or a mortgage during that time frame. If you are going to apply for a mortgage or an auto loan, it is better to wait until after your loan closes before you apply for any new credit. The last 10% of your credit score is for your mix of credit. So a good mixture of auto loans and leases, credit cards and mortgages is always best. Too many credit cards is not a good thing. 3 to 5 revolving credit cards is optimal, and having these along with the mortgage and car loan or car lease allows for the best score. So how many points does a late payment cost? Maxed out credit card 10 to 30 points, 30-day late payment 60 to 80 points, debt settlement 45 to 65 points, a foreclosure 85 to 105 points, a bankruptcy 130 to 150 points. So pay everything on time. If you see a problem, call your creditor to work something out. Avoid 30-day late payments at all costs. As we mentioned before, you should have 3 to 5 lines of revolving credit. Unsecured revolving accounts are given greater weight than secured installments. Credit cards are unsecured revolving credit. They carry significant weight with the credit bureaus, as they demonstrate responsibility and behaviour when given free rein. Secured credit is not as good, as it is secured by collateral, for example the house, your car, etc. Usually it is paid back in installments until the payment is made in full and the collateral is released. How often have you opened up your snail mail or your email to see all these offers of free credit reports? Well, avoid these like the plague. There's only one place where you can get a free credit report, and that is at the annualcreditreport.com. This is the only website that's monitored by the Federal Trade Commission, where you will not be charged for a copy of your credit report. You're entitled by law to one free copy of your credit report per bureau every 12 months. Let's now look at the 10 top credit myths and mistakes. Paying off an old collection account will improve your score. Filing bankruptcy or using credit counselling will improve credit. Applying for a new credit to consolidate debt will improve credit. Cancelling older credit cards is okay. Shopping for credit to get the best interest rates doesn't hurt anything. It's best to not use a credit card at all. Bad credit can be offset by applying for good credit. Paying off a card in full at the end of the month or before the bill is received will improve credit. Paying off collections and catching up with late payments will improve credit. Bad credit history must stay on your credit report for 7 years, so why bother? Don't make these mistakes. 2 years after a Chapter 7 bankruptcy has been discharged, borrowers can obtain an FHA loan, provided they have since maintained good credit. With regard to foreclosure, 3 years after the final date of foreclosure, the borrowers can obtain an FHA loan, once again, provided that they have since maintained good credit. Partnerships are critical. This is not the time to refer 3 lenders. You need one go-to lender with a wide array of available products, an expert in underwriting, a credit analysis and repair partnership, as well as someone who is local and accountable. Mortgage World should be your choice. We have these to offer plus much, much more. So, if you have any questions or would like any additional information, please give me a call. My number is 917-690-7069. That's 917-690-7069. Or you can reach me at mhart@mwbankers.com. I'm looking forward to hearing from you. Thank you very much.